GM, welcome to the Crypto Weekly Recap presented by Unstoppable Domains. My name is Josh Gordon, I'm your host. We've got a lot of stuff to dive into this week. It's been a scary week in the crypto world. And if you've been around, if you've been paying attention, it's really hard to miss, but crypto's down, Bitcoin, Ether down big, NFTs are down. It's a volatile time right now. This may be the beginning of a bear market, but we got to dive into the big stories of the week that really help us understand why some of this fear and uncertainty are really appearing. And I do want to note right off the bat, it's not just crypto that's down right now. Stocks, major stocks are down. Tech stocks are getting hit the biggest. Coinbase saw a price of about $50 a coin per share, and it IPO'd at like $275 6, 7, 8 months ago. Facebook and Amazon are down 40% on the year. Google's down. The safest index funds are down. So what we're seeing right now is really a macroeconomic downturn in a lot of assets. So stocks are down, crypto is down, real estate is high, interest rates are high, oil's high, and there's a lot of uncertainty around the Fed interest rate hikes coming up soon. So it's an interesting time, and it's a time to step back and really assess what your strategy is and understand how the market is currently working right now. So let's dive into some of the stories of the week and talk about it. The first story of the week has to be about the LUNA and the Terra ecosystem. So LUNA and UST have completely crashed. Now, this started when UST, which is an algorithmic stablecoin, depegged from the dollar. So to dive into stablecoins really briefly, we see two types of stablecoins really. It's algorithmic and collateralized. So a collateralized stablecoin is like USDC. And for every dollar of USDC, or for every token of USDC that someone owns, that's worth $1, the company behind USDC, which is Circle, they have $1 in the bank account. So each digital stablecoin is collateralized by a physical US dollar in the bank, one for one. Now, there's other stablecoins like Tether, and Tether has not opened up all their financials publicly to really show that for every dollar of Tether, there's $1 in the bank. Now, there's also algorithmic stablecoins like UST, which has really gotten a lot of attention in the last 3 to 4 months, I'd say, it's boomed. And this coin, I can't dive into the technicals of how the algorithm makes sure that the coin is always pegged to $1, but basically when the price goes to like 99 cents, then there's more LUNA that's pushed into the ecosystem, and there's like burning mechanisms. So there's kind of this supply and demand balancing that algorithmic stablecoins do, but people have been warning about them for months now, saying that there could be a situation called a death spiral, where once the stablecoin, the algorithmic stablecoin, depegs from the dollar, it creates this downward spiral that can't be stopped as people get scared, and there's more sell pressure than there is buy pressure. So what happened was the stablecoin UST depegged from the dollar. It jumped down to like 85 cents and then completely collapsed, going down to what it's at now at 38 cents. So LUNA, the coin that kind of burns and has changing supply based on the UST stablecoin, that was $86 a month ago. It is now 1 cent at this time of recording the video. So it's completely gone to zero, which has been wild. I don't think we've ever seen a coin that had that big of a market cap crash to zero, and it did so fast within a matter of days. So Anchor protocol, which is where a lot of people stake their UST stablecoin on because it provides like 20% interest rates, we saw $6 billion of UST stablecoin get withdrawn within like a 24-hour period. And that really like caused this bank run because people started getting worried about the depegging of the dollar for the stable. So they started withdrawing their money from the places they had it staked, and Anchor being the biggest pool of staked UST. And that really led to the fall of Terra, which is being called the biggest collapse in crypto history. This could go down as a similar situation to what we saw with Mt. Gox and the DAO hack from years ago. And so the Terra went from the $20 billion market cap stablecoin with a $40 billion market cap L1 network to nearly zero within a 1 week span. Now, I mean, that's billions and billions of dollars getting erased from the ecosystem in a matter of a week. Now, I think we're yet to see the ripple effects of how this is going to play out in crypto. I mean, the amount of people who lost significant sums of money, which is sad to see, is going to cause, I think, potentially really kick off the next bear market. Now, I want to provide a short explanation. There's tons of Twitter threads out right now around this Terra and collapse, but there was one tweet that I thought summed things up pretty well, and I'm going to read it to you. So it said, UST, which is the stable coin, sold off, and that led to more LUNA in circulation. More LUNA in circulation means lower LUNA price. Now, traders started to short LUNA, which further tanked the LUNA price, and they also started shorting UST, which you can do in places like FTX. And then centralized exchanges jumped in and they started banning UST withdrawals, and that really led to panic mode. So once people couldn't withdraw or sell their UST that they held on a centralized exchange, because sometimes when a price sees extreme volatility, an exchange will halt or pause that trading, just like we might see in the stock market when like GameStop went crazy, right? So that led to panic mode. When they unfroze the trading and we could resume, the price absolutely dropped. And then I think just the saddest part here is how many people that had their LUNA or their UST staked and couldn't unstake it or sell it, and just became victims of this collapse and saw their funds go to zero. So that's really the story number one of the week is just the LUNA and UST situation. Unfortunately, Dao Quan, the founder of LUNA, he basically said that the recovery plan is there's no recovery plan. So, and since then, this is just breaking news right now as I'm recording, but the Terra blockchain officially halted the blockchain. So the Terra blockchain halted network activity on Thursday. I'm recording this on Thursday, May 12th. And this was designed to prevent governance attacks, because since the price is so low of the coin, a governance attack of the blockchain is much easier to do because of the financial barriers are really low right now. So crazy to see, and we'll be following the ripple effects of this in weeks to come and be updating you. With story number two, I felt like it was pertinent to share maybe less of a story and more of an article. So we saw Fred Ehrsam, who was a co-founder of Coinbase. I believe he was previous CTO of Coinbase as well. He wrote an article back in March 2021, so over a full year ago, about surviving crypto cycles. And he shared his learnings over 3 market period cycles that he witnessed from 2011, 2013, and 2017. So he's someone who's been through the crazy parabolic uptrends and the downtrends over and over again. And he shared some really insightful information. So it's impossible to predict the future, but by looking back at these past cycles, it can give you a sense of what to be ready for and how to position yourself for the months and years to come. So hopefully, if you're watching this, you've been into crypto, you've been into NFTs for a while, and you're a believer of the future of where this ecosystem can go. Now, to get there, when down cycles happen, it doesn't mean you completely abandon your thesis, your philosophy, the work you're doing. I think it's important to note that there are hundreds of companies with billions of dollars of funding who are all working on building the infrastructure of tomorrow. And just because crypto prices are down doesn't mean these people are abandoning their work. So there's tons of innovation that happens in the bear markets, and we start to realize the euphoria during the uptrends. So let me share some takeaways from Fred's article. So one he says is these cycles strengthen the ecosystem because crypto has exited every cycle stronger than it's entered. And this is true for things like developer activity, academic research, infrastructure maturity, corporate adoption, public awareness, the list goes on. So zooming out, cycles can be reframed as volatile periods around a relatively consistent adoption curve. The adoption curve is going up. More and more crypto adoption from a DApp perspective, from a developer perspective, from a mainstream awareness perspective, continues to go up regardless of the price. Now, what we see during these trends is that especially the parabolic uptrends, is they push infrastructure to the limit and they wash out weak projects. So Terra is a great example. Terra had an extreme hyperbolic uptrend where we saw growth and billions of dollars in the ecosystem. Now, we were experimenting with algorithmic stablecoins. Now, what we found is that potentially algorithmic stablecoins might have poor fundamentals, flawed strategies that were exposed. And then during this down cycle, that gets washed out and the next wave of innovation flows in. Now, another thing he said is prepare yourself for a marathon, not a sprint. So many people get burnt out. You have to stay healthy, allow yourself to clear your head, make sure that the challenging situation doesn't become too much to overcome. So that means position your portfolio properly. Don't have 100% of any of your positions in one coin. So as much as you can believe, some diversification can still be a good strategy. Now, another final word from Fred was, cycles are neither good nor bad, they're natural. Peak euphoria provides the opportunity for the world to dream about the future. Rock bottom despair forces practicality and clarity. When things are good, they're never as good as they seem. When things are bad, they're never as bad as they seem. So he goes on to finish with, times when things feel like they're going well are times to build resiliency and set yourself up for success no matter what the future holds. I hope you embrace that opportunity. So, at Unstoppable Domains, we're not stopping the work we have to do. We have 160 plus people globally, heads down, focused on building week in, week out, regardless of the price of Bitcoin. So while the media may want to talk about the prices, how things are collapsing, how the things are over, my dad already sent me a told you so text. But what I really want to emphasize is all the great people who are working in the space, creating content and educating others about crypto. We're not going away. And, it will be a little bit of a, see, this is what happens when you stick around. And, maybe it's months, maybe it's years. We'll find out. Story number 3, to keep things on a lighter note, I want to talk about an NFT drop of the week that was pretty interesting. We saw Madonna and Beeple collaborate for an NFT collection on Super Rare. Now, the collection has a theme of giving birth to Mother of Creation, an NFT triptych. So proceeds will go from the sale. They'll benefit nonprofits focused around supporting women and children around the world. Now, this is a 3-part collection that's on an auction right now. And it's interesting. It shows Madonna giving birth in very kind of graphic and visuals. There's nudity involved. We really get up close to this female figure that closely represents Madonna. And I'm seeing some pushback online. And some of it's making good points. This collection is around Mother Earth, but why does Mother Earth in this image really reflect a white woman with perfect body aesthetics versus the reality of giving birth? Does not look that way. So I do understand this is art and not necessarily practical, but it's interesting to see some feedback pointed out by the community. I'm saying, we need to make sure we're representing women's bodies in a real way and shedding light on that too, and not just perfect aesthetics. So the auction actually isn't crushing it right now. The respective NFTs have a 15, 10, and 6.5 ETH bid at the moment, which is probably the lowest you could ever get a Beeple creation. Even though this is coming out under Madonna's name, it's still in partnership with Beeple. But yeah, a Beeple work in your collection is a grail. So interesting to see that the prices are low right now. Now, in Unstoppable Domains news, let's talk about Unstoppable. We have some fun updates. We launched UD profiles that now support NFT avatars minted on Polygon, Binance, Avalanche, and Fantom. So Unstoppable Domains is blockchain agnostic. We will support the blockchains that our community members support and want to see connected. So this is pretty cool because now UD fan people who have minted NFTs on those blockchains can link them to their Unstoppable Domain profile and verify ownership. You can add it as your profile picture, and it really helps create a digital identity that's all you and all yours. So I love to see it. I know that there's thousands and thousands of people out there who are minting NFTs on different blockchains, and especially PFPs, and now you can connect them through your UD profile. So awesome to see. The second piece of Unstoppable news I want to highlight is this great blog post written by some of my colleagues that covers the reasons you need an Unstoppable domain. And those reasons are persistent portable identity, reputation, digital property ownership, permissioning, off-chain data association, and humanity check. These are things I've written about extensively on my Twitter account and a big believer in. So please head on over to this blog post. We're gonna make sure it's linked in the description so you can check it out. And yeah, if you like those reasons, snag yourself an NFT domain name. All right, community member of the week. I want to give a big shout out to Web3Manny.x. Now, shout out to you, man. You supported my giveaway on Twitter. I gave away a Roboto NFT in partnership with the Roboto's NFT community after I interviewed Pablo Stanley on the Unstoppable podcast. And part of the giveaway, I asked people to leave a review of my podcast. Web3Manny jumped in, gave a great review, and it's just nice to have a supporter of the pod. I appreciate you and you following the content. I hope you enjoy the Roboto. I'll see you on Twitter. All right, with our NFT project of the week, let's talk about a cool one. It's called Little Nouns DAO. Now, Little Nouns DAO is an extension, it's an expansion of Nouns DAO, and they actually received a grant to create a new layer within the Nouns ecosystem. Now, Nouns now have these little kids. So by expanding the ecosystem, Little Nouns DAO aims to expose more people to Nouns and CCO ownership. So basically, Nouns is this project that gives you like open copyright to reproduce the likeness of the work and in the public domain. So one noun is minted every day forever. And the money from those proceeds go to a DAO that each noun holder gets to decide how they spend. And I think they have like thousands of ETH in this DAO. And so Little Nouns, to make it more accessible of an ecosystem, instead of minting one per day, now mint one per every 15 minutes. So while a noun may go for 80 to 100 ETH at auction per day, a little noun, they're going for like 0.3 ETH, 0.4 ETH. Some are going for over an ETH for the ones that are super aesthetic. So pretty cool, very small project right now, doesn't have a lot of traction. So they, on the night when these launched, I actually saw it on Twitter and I spent about an hour watching these mint. So I saw about 4 go by, and I did put a bid on one for 0.6 ETH. I got outbid at 0.65. I said that's where my limit is drawn, but a very cool project, and I think it'll be interesting to see how this helps expand that ecosystem. All right, thank you so much for listening to this week's episode of the Crypto Weekly Recap. It was a little bit of a longer episode because I really wanted to dive into Luna and the craziness that's going on in the crypto markets. I hope you enjoyed it. Please, don't be afraid right now. This is a time to assess your position, figure out where you want to build your base through the bear market, and I always recommend to my friends dollar cost averaging, setting aside an amount you're comfortable spending each month on crypto and just buying in over time. You're not going to catch the bottoms, you're not going to catch the top, but you can get the trend over time. And the trend over time, as crypto prices go up. I'm here for the long term, so is Unstoppable Domains. We're building, we're creating, and I hope you come along with us. If you like this episode, please subscribe to our YouTube channel, follow along on Twitter and on the Unstoppable podcast on Apple and Spotify. I really appreciate it, and it helps us reach more crypto curious people. So with that, I'll see you in the metaverse, and I'll see you next week.